we are announcing that we have a new strategic framework for the company, and it's a change from the past. The company, as you probably know, has been focused on increasing its margins for the last 5 years. And we think now going forward, we have the right base to start growing from there. And so we are announcing a plan that is more focused on top line growth and increasing our sales around the world.
So where's the growth going to come from? Organic growth, 2 to 3%, right? That's the target for next year. Where do you see that happening? Under Irene, a lot of the focus was on the power brands, Oreos, Ritz crackers.
Yeah, well, that's one of the changes. We do have these big power brands, like you said, Oreos, Ritz, Milka, Cadbury. But as we have grown through acquisitions, we have also acquired quite a lot of local brands, which are quite unique and quite linked to the culture. And I think they've been neglected a little bit. And because of that margin pressure, we were not able to invest in those local brands. So that's a big change we're doing. The other big change that's taking place in our space is that there is a shift in channels. And so we've been very focused on supermarkets and grocery. But there's other channels that are growing faster, and so we're going to make a major shift.
E-commerce?
E-commerce, of course, is one of those, but also convenience stores, discounters, the green channel, and so we see more growth as we go into those. Emerging markets, of course, very important. We still have big opportunities. We are not always the leader in our different categories that we have around the world. So we see that as a big opportunity. The other one that we are going to focus on is our brands can play in other categories. We're at the moment a biscuit, chocolate, gum and candy company. But if you think about Oreos, where you already can see the example, Oreos is in ice cream, Oreos in yogurt, you can find Oreos brownie.
Wanted to talk about some of the industry problems. Campbell's Soup is in the news again now, reports that there's an activist, Dan Loeb, who's going to go after the entire board. The problems at Campbell's, do you see that as an industry phenomenon or a company-specific issue?
Well, it's obviously difficult for me to comment on other company. I do think that the CPG world is changing in a big way. And it's changing because the consumer is changing. And you need to adapt to that. And there's different ways to adapt to that. The way that we've chosen is to say, well, we're a snacking company. 85% of our business is snacking. We're going to become a 100% snacking company.
After some of the changes, they're going to become more of a snacking company with Snyder's-Lance. Is it a company that you would look at? Sounds like it's sort of for sale.
Well, difficult to say. We think we have the right strategy at the moment. There's these tag-on acquisitions that I was talking about. That's our focus. We don't want to end up in categories that we don't want to be in. So I would say at this moment we want to stick to our strategy.
Do you see this trend of more activists coming into the space and targeting these companies? Nelson Peltz no longer on your board, still a big shareholder, and I can tell you, after speaking to him, a big fan of yours.
Thank you. I find the relationship that I have had with Nelson and Peter May, who's now on our board from his company, has been very good. The points of view they bring to the table are very reasonable points of view, and he challenges me, and I think that's the right thing. I don't really mind, to be honest. I think the margin agenda, and every consumer goods company has gone through the margin agenda. It was justified. In our case, it was justified. But you can't keep on running a company like that. At a certain stage, you need to grow, because otherwise it becomes more and more difficult to grow your bottom line. And I think Nelson agrees with that viewpoint to the point where we are as Mondelez at the moment.
You mentioned the changes going on within the CPG category. I mean, you've spent time at so many of these companies, Coca-Cola, for instance. What happens to the big American brands? Are they going to shrink? Are they going to disappear? How do you think about the future of some of these companies and some of these storied brands?
I do think there is still a place for these power brands, these big American brands. But yes, they probably will shrink. And what we need to learn as the big CPG companies is how do you still keep on growing your big power brands, but accompany that with smaller, more niche local brand? And how do you run a model that does both? And I think that's the big challenge we're all facing.
What about the American consumer? What are you seeing right now in terms of willingness to spend? We just came off of a great quarter, 4% consumer spending growth. Is that going to continue?
I think it is. I think there is a very positive sentiment with the consumer at the moment. We clearly see it in our categories. They're accelerating. Biscuits is growing quite nicely. Gum, which was an underdeveloped or not so well-performing category, is up. So yeah, I think there's going to be another good quarter ahead of us. I see a lot of positive sentiment, a lot of confidence, and we feel it in our sales.